Welcome to Trading Lounge and the US indices for Wednesday, October 12th. And just starting on the weekly chart here. So we've got wave A here, and we're looking for wave B, and we're looking down for wave C. Now, we may not come all this way down. It will just depend on how things pan out. There will also be the possibility, but it's a bit of a long shot because it's not what stocks is telling me, that we'll have the A, the B, and the C wave to this area through here. I don't think it's the case, but we'll just see how quickly this comes down. But that would give equality down to here for this. And I think that wave 1 could extend down this far, but we'll see. We'll see how it goes. But yeah, when we do get the main point is like when we get these 5 waves down here and they finish, it possibly could be wave C. I doubt it. And then we'll get this rally, so it will look like a lot of folks will be going, well, that's the end of it, and we'll be pushing, you know, we're going up from here. But I don't really think that that's the case, not when I'm looking at the bond market, of the yields, and those sorts of things, and even stock as well. So yeah, I think there's a bigger picture to come to the downside. But look, as always, all one can do at the end of the day is try to stay within the grasps of the evidence that's unfolding. So all we can do is we counted down for wave 1 and then 2, and then we had 3, and wave 4 was a little bit tricky, but we end up sort of getting it, and now we're getting wave 1 here and 2, and we have 3 and 4 and 5 coming down. So when we get down to the bottom here, we know that we're going to go up, and that's kind of enough, really. You know, that's quite big within itself. You know, how far we go, we just got to count our curds and ways as we go, you know. And but yeah, so certainly you know, one would expect, you know, at minimum some sort of equality between these two, but I can see that this is really quite fast here, so I don't think it's a C wave in this area because of the speed of it. You know, when we look at this, that's taking it from that point to that point, right? So we don't know where that bottom point is yet so far, but even so, it's moved away from that line, and it's giving us that extra speed down here, isn't it? So in a way, it's even sort of behaving like a third wave rather than a wave C. So yeah, there's you know, the personality of the structure is saying that we've got, you know, further to go down with all of this. But anyway, we just keep shooting the breeze over it, and yeah, it's all we can do, really. But we know that it's down. You know, that's the main gist of it all. Okay, so let's just cruise in and just go step by step. This is the daily chart, and this is the way B. We've got the A and the B here. So we've been looking at this as 1 and 2. And then down for 3 and 4, and now we're going down for wave 5. It's possible because the sort of an extension in wave 3, so that sometimes leaves wave 1 over here and wave 5 here roughly the same length. But when I look at the length of wave 1 here, that's already halfway down here, isn't it, you know? So I would imagine that this 5th wave here could extend out a bit further. So where does it come to down here then? I'm not quite sure. So we just got to count down as 1 and 2 and 3 and 4 and 5. So it might be 3-3, it might be pulled to this number, it might be shorter, but I think 3-3 is a nice starting point. But when I talk about that, it can dip down into 2 and those sorts of things. Could certainly come down further because of the speed that we just looked at. You know what I mean? The speed of this, you know, compared to this leg here to this leg, it's kind of it's pretty quick, you know. So, you know, the wind is in the sails, and it could cover some nautical miles on this. So we just need to be aware of certain things, you know, just sort of gathering information and wait for the news on the wind, so to speak. And yeah, so let's just cruise in again. So now we're going to go into the chart. So we've been starting on the 50k, pretty big, but it gives a little bit more of a definition, just slightly. So now we've got a few things to talk about. We know that we've been looking down here as wave 1. So the question is so now we need to discuss this. But what we can see here is we can see that we've got a nice a nice strong third wave in the middle here, haven't we? And so we've got this consolidation here that we need to unravel, and we've got to come up with some strategies for that. We know that there's also going to be support at the old lows, and we're seeing that, and we're seeing it all bit consolidated in that space. And also too, I think that on the close here, we may have, I don't know for sure, but I know that we had the producers price index, which is a bit of a lead into the consumer price index, which comes out the same time tomorrow. So I think that volatility came from the PPI, and we'll see the CPI come out at the same time tomorrow. And you know, the consumer price index, you know, I don't have a deep understanding of these type of things here, but you know, it's from what we can see from the Feds that, you know, they're all eyes on the inflation. That's, be it right or wrong, that's what they're doing. And you know, there's things that lead up to that particular CPI, you know, and there's the PPI and the employment situation that happened on Friday is also a lead into that as well. You know, everything is connected in one way or another, but I don't have a deep understanding of that. All I can do is just count a few pretty pictures on the page, you know, which in itself is a tool that you can add to your basket, you know. So all I can see here is we have a nice 5 waves down here. We need to reconcile this, but once we do that, then we would be looking at the next leg down. We could look at that in a few ways, but you know, the first thing that we can look at is that if that was the length of wave 1, then if that's wave 2 top here, we don't know that yet, then we'd end up with wave 3 down here. But wave 3 is normally a bit longer, so we could probably put wave 3 at the 3-3 area here. You know, just a bit of a sort of a guess. I mean, I can do Fibonacci extensions from the previous wave and this wave and so on, but yeah, we can expect wave 3 to be the same size or longer, add a 60% onto that, and then we look at these numbers here, and then it would be, you know, coming down into this area through here. You know, it does bring the wave 5-5 of 1 quite deep into this point, and this whole length here would be roughly the length, if not more, of wave A over here. You know, the length of this one over here down into this point. So it's kind of going to be, could be, I don't know, we'll just see, do you know what I mean? And then we know that we're going to be looking for a bounce for wave 2. Now, I could have that wrong, and maybe it is wave C here, and the market continues to the upside. I don't know, I don't know that, but from what I can see, you know, it's pretty clear in the 10-year yields what's sort of happening, and the, you know, the bonds are the opposite to that, and the bonds are quite in tune with the stock market at the moment, you know, and same as the currencies as well. So anyway, look, we'll just get to this particular point, and then we know that we're going up. That's all we do. And what we will do as this moves up here, sure, we can trade it in certain ways and do certain things, and we'll have a look at it and we'll judge it, and we'll all come up with ideas about how it, you know, what it looks like and all the rest of it. But at least we won't be totally sort of naive and not expect it to come back down. We'll be looking for that, and we want that, you know. So that's what, you know, anyway, that's the thing there. So yeah, the media will change, and everybody else will be, you know, people that don't use Elliott Wave or whatever, the market start to move up. There'll be, you know, is it over or not over, and all the rest of it. Anyway, enough waffling. Let's just go in and so on the 50k, I think we'll just go into the 10k here now, and So this doesn't really give us a lot here at this particular point, just gives us a better sort of move here. Now I'm going to be looking at this spike that we had from the producers, the PPI, I think it was from that anyway, then that, you know, we need to, yeah, it just chucks another little spanner in the works, because I was looking at an A wave and a B wave and a C wave, but I was re-looking at this here. So I'm going to be looking at this. We're going to come up with a few different things here, right? But the end of the day, this little move down here is not completed. So what's going to happen, it could be a B wave here coming down, because it's only in 3 waves coming down so far. If we do get another low in here, that's going to give us 5 waves. Now that's going to produce 2 things. That's either, then we're going to come up, we'll either come up 50% or 60% of the length of that and come down, or we're going to go into this move up here higher at this point. So we're just going to talk about that a little bit in here. And the thing is sorry, I didn't finish off there. Just conscious of talking too much. But the thing is that it's going to leave a low at that point. So if we get 5 waves down, it's going to leave a low. So any rally back up, any small rally back up, then you can short that, and any higher rally we'll be looking at that as well. So I just want to have a look at this trend in a couple of different ways. And I think I don't know what I've got on the 5K here. It's okay. So this was kind of interesting. We'll look at this on the 5K, and we'll look at this on the 1K as well, just to get a bit of definition. It doesn't really line up with the rest of the markets around the place, but I kind of like it in a way, which is just looking at this here as down for 1 to this point, which will be 1, 2, 3, 4, 5 in here. And then we got that spike, so looking at that spike as wave 2. And then looking at this spike coming down as wave 1 and 2, then 1 and 2 here, and there's 5 waves in here for 3, 4, and there's 5 in here for this 5 of 3 and 4 here, because it's drifted down a little bit further here now. So this leaves it a little bit trickier. I could tighten this up in a couple of different ways, but we could look at it as 1, 2, and there's 5 waves here, so 1, 2, 3, 4 and 5. Now there is overlap between 4 and 5, so you may not want to go there. So we could, I'll just finish this off. So wave 3 here, right? And then wave 4, and then wave 5. Now this wave 5 down here as wave 1, it doesn't have its 5th wave down here yet. There's only 3 waves. There's say 1, 2, 3, 4. If we drift down here lower, then we'll have 5 waves. If we do have 5 waves down here, let me just delete that. If we do have 5 waves down here, once we do get those 5 waves and the market's moving up, then we can go short under that point. Now, it may just go up here from that high to that low. It may just go back up 50% and then come down. That would be the other count. But otherwise, it's going to move up there. But it doesn't matter, because it will leave that low there exposed. Now this could also be an A wave, a B wave here, and move straight up from there as well. I'm just covering all the bases, okay? The other way we can tighten this up here really is by putting wave 5 here, wave 3 here, wave 4 over here, and wave 5 here for this. 1, 2, 3, 4, 5, yep. And put this wave 1 here, and then look at this here as the A, the B, and the C wave here for wave 2, but it's a little bit small with everything. I mean, it has moved out, you know, give it a bit of credibility. It has moved out of the trend channel. Do you know what I mean? It is different, but typically a wave 4 can do that as well, just not a wave 2. But this means in this case, this would be wave 1 here with an ABC for wave 2, and then down for 1, and coming back for 2, and then coming down. So that's what I mean by this low here being exposed here, right? So, yeah, so this is one situation, right? So anyway, you shouldn't miss this now, because you know that. So now we need to go in here and just have a bit of a look at this, which will go to this count that I've just had. Well, the one that I just had before is also on the 1K tick. So it's got 1, 2, 3, 4, 5 here, and then 1 and 2 and 1 and 2 here, and then 5 waves down here for 1 and 2 and 5, 1, 2, 3, 4, 5 here, yada yada yada, 4 and 5 for the third wave. And then looking at this, so there is overlap in this situation, wave 4 and 5. But what I want to, it doesn't matter. I mean, it's nice to be able to know which one is right and wrong. But even if we don't, as long as we got some sort of strategy that we could handle the situation, right? So far as you could see here, we've got that strong move down here. So would this be a third wave? So this would be a fourth wave here. So let's just assume for a moment that there is a fifth wave here, because if there is 5 waves here, then we're going to get an A wave, a B wave, and a C wave here, and then we're going to come down again at that point. So it just leaves that low there exposed. So that's one thing. But if this is the case here, and we've got wave 1 down, we've finally got wave 1 low here, well then we're going to be moving up here for an A wave, a B wave, and a C wave up here, right? But when I look at stocks, that's just not the case, you know. Yeah, I suppose it could be. Let me just see where the banks finished up after all of their mess. This is BAC here. So with BAC here, we were looking for the low in here, then the A wave, the B wave, and the C wave for wave 2 coming into play. So this move so far down here, it can be a wave B at this stage. Because what happens if this move here, right, just stays as it is here and then moves up here? It'll move up in 5 waves and then come down at that point. So let's just go up to the 100 ticks and just look at this situation here. So let me get some more data here just to get it all in there. So this is where we were counting yesterday, so to speak, but we need to add a little bit more on the low here. So yeah, I'm thinking the best bet is wave 3 here, 4 here, 1, 2, 3, 4, 5 here. I think that's a reasonable case, but I can't confirm that just yet. But if that's the case, then we'll put wave B here, and then we'll look for wave C to the upside. Because you can see that strong move here, can't you? You know what I mean? It's like, if this had dropped, let's just, if we give it a bit of space, let's just take it from, I could take it from this high, but I like to be as conservative as possible and give it as much space. So currently we're at the 38.2% retracement level here, right? So if it give it a little bit of space, it could go to the 36. Give it a bit of space. If it fails and comes down and makes a new low, you don't have to panic, because it will snap back and it will give us an A wave, a B wave, and a C wave back up here to the 50, get from there to here, the 50-60%, and then it will come down again at that point. But if that stays in place here as an ABC pattern here, and this just continues on its journey up here and finds the 36 as the support, well then it'll go higher up here, and then this B wave becomes valid at that point, you know, and then we can look for our C wave up here. Now, it may or may not reach the 50-60% retracement level up here. And then we've also got the CPI figures coming out on the same time again tomorrow. So it might be, you know, buy the rumor and sell the fact type situation. So anyway, as far as the crow flies, we've got, we have to wait for another low here before we can short it. We can't short it just now, because could get trapped and end up here. But if we get another low in as 1, 2, 3, 4, 5, then you'll know that this wave 2 here is actually over here for that. or over here for that as well, or that matter. But anyway, the main point is that we're looking for the short, so that low becomes important at this point. If this ends up just in 3 waves here, because a B wave can take the low out here, if we just end up with a B wave here and then we move up here for the 5 waves up here for the C wave, then you can look for the short trade over this side. We're nearly there. It's just a matter of how it's going to play out. Let's just have a look at the other markets. Just have a look at the SPY for a moment. So yeah, the same thing here. So I've just got this as the B wave. If the market normally takes out the low here, then it's very rarely will it go all the way back up here. It'll just go to this high or just take that high out as an expanded flat type of thing. So let's just see if we get that, or if we get that, then we might need to move wave 1 over here for that. That's the thing as well. So but it doesn't really matter, because if that moves up here, then once that moves up there, then you need to be short under this point here. And if that's the case, then we may get our ABC pattern from, yeah, it's possible, you know, it's possible that we're sort of in here. Anyway, we're getting there. Let's just have a quick look through the other guys. So this is the NASDAQ here. This is one of the weaker ones, and it has made a new low down here, but it hasn't given us 5 waves down here just yet. And if that, it'll either give us 3. If we do get another move down here, then we're either going to come back up. We're either going to, yeah, well, if we do get another low here, we're either going to come back up halfway and come down, or if I can just draw this over here again, then we're going to come up here for the A wave, the B wave, and the C wave here, and then we'll come down. They're the 2 pathways. So we still need our rally, basically. That's what I'm seeing here. Well, this is interesting for the Russell. Is this the, it's not the ETF here, is it, either? So this is the ETF here, so it's still short here. So in this case, it makes a good case, doesn't it, for having the A wave here. And the B wave here in this case. And then the C wave up here, so it's all pretty rosy here. This is what we originally expected, and that's sort of playing out quite nicely, isn't it? So let's just see how that goes. That could be a nice sort of template. That's the ETF, and this is the same here for this one. So 5 waves up here. So yeah, let's just see how that plays out. It'll be like this. So if you can count those 5 waves, then you can short it at that point. And this would be a nice size compared to this move over here. This, even though that this here looks like it's not the high here on the ETF, on the cash, it is, that is the high there. Not by much, but if I bring up the ETF here, you'll see that it's a little bit higher than that one. So, but yeah, I mean, it does make me wonder, you know, got to look at these things. So yeah, an A and a B and a C. It looks pretty simple at this point there, doesn't it? Doesn't seem to be too far off, and you know, it came back up to 38.2%, so that's really good. So you could probably short that in that space. It's nice and simple. What about the DJ? So, okay, so I've got the DJ like a little bit different here. So, yeah, I've counted down. Can I count it down in a different way? Yeah, I could sort of, yeah, I could change that as well. I think I might need to change that. But just take note that that I've got it like this here with the A, the B, and the C wave. We don't have 5 waves down here. If we do get 5 waves down here, right? If we do, then there's going to be an A wave coming back up and a B wave and a C wave coming back up, and that will stretch as far as it can go, and then it will probably collapse from that point, leaving that low here exposed and that second low there exposed. But I could push this back over here, which I think that I might need to do, and put that here and that here and then that here and this over to here, and I'll put that there, I'll put that here, and I'll put this over here, and this would go to here and here, because it's sort of that's definitely 5 waves in here, and that's also 5 waves, a little bit of an overlap, but not a biggie. And then that would come to here, and that would be here and here. So that would be 1, 2, and 3, 4, 5. Yeah, it feels a bit better actually doing that. So I think that's it at this point. I mean, the thing here with all of this, you know, I mean, what sometimes you got to go back to basics, is that we've seen, you know, from these here, we've seen the market come out of, you know, this trend here. We've breached that. We're on this side, isn't it? You know, so we got to be in wave 2, really. It just makes sense, doesn't it? You know. So if this does not come back here, then you need to count 5 waves up here, and you know, we could end up with much the same size here, and that would take us right to the 61.8% there, which you could also look to short. And obviously, oops, Daisy, too many objects on the chart, so I won't worry about that, but let me just change that. Okay, got you there. So I'm just going to remove these here. Okay, so that makes it pretty simple. I don't need these here actually. What else don't I need? Don't really need that. Don't need that. Don't need that. So yeah, in fact, this little one here is this little thing here is a bit like this here, really. This bigger one, it's like another fractal of that. Okay, so that's where we are with all of this. So do we need to recap this in any way? Here's the SPY again. So it's looking, you know, when we looked at, you know, the Russell and that, as a B wave down here, that was quite good. I mean, we got a bit of a spanner in the works because of the news that came out, obviously, because it came down, you know, sort of hard and fast. But I think we should sort of still just stay with our B wave here as the main sort of option, and let's just see how it goes. And if we do make a new low here, then that will give us 5 waves to that low. So that means that two things could occur. It means that if we do get another move down here, it means that we'll either get an ABC pattern back up here, or from this as a wave 2 of C over here, or we're from that top to this bottom here, we're going to go up in an ABC pattern from here of 50-60% and then come down at that point. And then we would need to consider this as wave 1 over here coming down at this point, and then the wave 2 would need to go in over here for that. And you could pretty much look at this here as a B wave here, as an A and a B and a C, you know, for this wave 2 here. And then this down here as wave 1 and back for wave 2 in here. So it's possible. Let's just see how it plays out. It's never as easy as you want it to be, is it? And tomorrow is going to be a little bit tricky as well with that CPI figure. We're going to see probably see some volatility in the market with all of this. But anyway, as far as we can see so far, we know that we're going down further. There's no real doubt about that because we have got an impulse wave down here. That's the main point. Second point is that if this little structure here turns into 5 waves, that means it can be this wave 1 or this wave 1. If it's the green wave 1, it's just going to move up to here and then come down. And if it is this wave 1 here, then we're going to have an ABC pattern at that point. So they're the two other bearish options, but I think that we're still looking at the A wave, the B wave, and the C wave moving up here higher. Okay, so I'll leave it at that. Let's just see how it unfolds. Okay, cheers.